Hello everyone and welcome to XM Live. This is a channel or this is a service by XM where you have on 3 different channels 8 hours every single day live trading and trading education. My name is Gil Paz. I already mentioned that I'm a full-time trader since 2012 already. I trade my own capital, I trade also sometimes for institutions. And I share here my knowledge with you, and I share mostly also my trading strategy. And my trading strategy is built heavily on the COT report. And I will explain what this report is, how to read it. And the report also just came out yesterday evening. Normally it comes out on Friday evening, but because of New Year and all kind of turbulences in America, we have the report just yesterday released. I didn't fully analyze it. I analyzed it by 3 quarters. And so we will finish the analysis with you together. So you will have live preview how I prepare for the week. Now, whenever you have any questions, please don't hesitate. This is live. You can ask questions. And I see already, yeah, hello, also on YouTube. Fantastic to see you all. Danushka is here also. Great to see you all. So I will do about 10 minutes an introduction about the COT report, and then we will look at the live data, and hopefully also we will get some great trading ideas. By the way, I think we are on a pivotal point. We are on a very, very important point. We could see major trend reversals coming towards us, especially in the Forex market, but not only, also in commodity markets. And again, we will look into this. I will also give you a little bit a fundamental overview how I see the things going. So, William, also good morning to you. COT report insights, that's the session that we are having. We are talking, so my trade identification. So how do I analyze the markets? I am not a proper technical analyst. I think, look, I started as being a technical analyst, 100%. But I found over the years the technical analysis is very, very subjective. And you can have in the 5-minute chart an uptrend, in the 1-hour chart a downtrend, in the daily chart an uptrend again, and in the weekly chart a downtrend, and it's just so confusing. So you can find in almost every chart arguments for both sides. And obviously, when a deal is done, there is always a buyer and a seller. So obviously, there are always somebody who believes it's a good thing to buy, and somebody believes it's a good thing to sell. So, because of that, I'm not relying solely on technical analysis. You will see technical analysis is actually only my last step in analyzing the markets. My first step is the fundamental picture. Now, the fundamental picture, especially when we talk about currencies, it's macroeconomy. It's about inflation. By the way, we are having a super important week ahead of us. We will start to get inflation data from the US today and tomorrow. And we will get also from tomorrow from a lot of European countries inflation data. And then, so this is a very important inflation for currency, and in inflation week for currencies, this is super, super important. So I look at inflation, I look at the economy, I look at monetary policy, and just to give you a very small overview how I see fundamentally how markets look like, we are having an inflationary environment in the US. We have also an inflationary environment in New Zealand, but we mostly have deflationary environments in Europe. So Europe is deflationary. I would say also Japan is deflationary. And so we get this divergence between inflationary world and deflationary world. Now, in the US, this will lead to cutting interest rate less, and maybe if inflation goes even further up, we could see increases in interest rates. Whereas in Europe, we have a deflationary environment, they probably will continue to cut interest rates a couple of more times this year. At the moment, this leads to a strong US dollar and weak other currencies. But this can change around because inflationary environment means actually that the currency get weaker. So I believe that we will see some kind of trend reversal within the year and the US dollar will get weaker. So this is my fundamental picture. Then I go into the sentimental picture. And the sentimental picture, now, by the way, the fundamental picture is not dictating what I'm trading. It's just, it just gives me an overview if it's good to trade. Because if there is nothing happening fundamentally, most likely currencies will be in a sideways market. And in sideways markets, it's very, very hard to trade. And then, so in this environment, if you have those environments, I prefer to go into stocks or indices and not trade currencies and commodities. But at the moment, the environment, because we have a world with inflation, an inflationary world in the US and a deflationary world in Europe, I think this is a very good time to trade currencies and commodities. Sentimental analysis. In sentimental analysis, we are not looking at the economy. We look at the market participants, how they react on the economy. And based on what those market participants do, I will position myself. Now, I get the sentiment data from this COT report, and I will soon explain where I get this report from and how it looks like. Okay, but this report gives me the direction which I want to trade, which product I want to trade, and in which direction I want to trade. So I can get like euro dollar based on the sentiment data. I don't want to trade it. Or I want to trade it short, or I want to trade it long. And then during the week, I will look just at the technical chart. And this is the third chart. During the week, I look at the technical chart, but I will look only for one direction to trade, and I look for a good risk-reward ratio. That's it. That's my trading strategy. Okay? Now, of course, I can go into detail from trading strategy and talk about risk management and how big is my position and how do I calculate this and how do I build a portfolio with multiple currencies so they are not But this is not a theme today. This I will explain more on Thursday. I will go deeper into my trading strategy. Today it's about the COT report. So the COT report is a report that is published by the US regulation, which is called Commodity Futures Trading Commission. And the US have two regulatory commissions. We have the SEC, which is responsible for stocks and assets, and we have the CFTC that you see here, which is responsible for derivatives, futures and options. Okay? By the way, also more and more for currencies, for cryptocurrencies, even though cryptocurrencies falls a little bit behind both regulatory bureaus, also the SEC and also the CFTC. But this is a website. It's accessible by everybody. It's free. And there are the reports. You can download them. How do the reports look like? Via the reports, and I will show you. This is what I do after with that. But if you look at the report, if you download it, it looks like this. So you have a lot of columns. This is just a downloaded data from yesterday evening. So this is absolutely new. You can see here hundreds of products. There is really, really a lot of data. I don't need all of those data. I will explain exactly what I need. So when I do the report, there are today 3 different reports that are important for me. There is the old report. It's called the legacy report, And in the legacy report, you have three different trading groups that I'm analyzing. The first group are the non-reportable. Non-reportable are small speculators. What's interesting about them? They're like you and me. Now, as a group, look, one single sole trader can be very smart, but as a group, they're not very smart. And they normally get a very bullish or very bearish extremely late in the trend. And that's normally the time you have to look for trend reversals. So that's the non-reportable. Non-commercial, it's big speculators. This is institutional money. Here, you have hedge funds, you have asset managers, you have mutual funds. Here you have people or organizations, better to say, mostly organizations, that manage billions of dollars and they can actually move the markets. They have enough purchasing power so they can move the market. They're speculators like you and me, but they are professional speculators. They have biases and they get very strong bullish or bearish. You will see this very soon when I show you the different charts. And then you have the commercials. The commercials, they think differently. They're not speculating. Because they're not speculating, we have to look at them differently than how we think. We think in how can I make money? Like I want to go long in euro dollar. In order to make money in euro dollars, I believe it goes up or down, right? But they think differently. They manage risks through the future market that we are analyzing here. So you can call them market makers. I would say that's market makers, dealers, producers, processors, they have a lot of names. But what you have to understand with this group makes money with a real product in real life. So, for example, if we are analyzing gold, so you have the small speculators, you have the big speculators, they all want to make money, but the commercial, it's the gold miner. It's egg. So how do they make money, the gold miner? By selling gold, right? That's how they make money. They dig out gold from the mine and now they're selling it. And they manage the risks over these markets. And those are the commercials. Okay. Additionally, we have the open interest, and the open interest, you have to understand a little bit like the volume. An open interest means, look, we are analyzing here the future market. And the future market is made by a contract with a buyer and a seller who are buying and selling gold, let's say, in the future, in February. Okay? So they say, I will go on a buy and I will go on a sell. Now, and this is an open interest. This contract is open. It's not yet delivery time. Okay? And this is the open interest. So if you have a lot of contracts open, the open interest is big. There is a lot of interest in this product. That's what you have to know. And again, it's kind of the volume. So this is the old report. We have the new report for financial products. And the new report, the dealers, those are the commercials. We have the non-reportable, that those are the same group, small speculators. And the big speculators are divided into three groups. Okay? And Anushka says, do you have an example? For Forex, it's a little bit complicated. Yes, of course. The best example for Forex is that you go, if you go to travel. I don't know where you live, but let's say you live, I will say as an example, you live in Argentina and you want to travel to Europe. So what do? You go to the airport, and at the airport there is an exchange. And you tell the exchange, I am selling you Argentinian peso and I'm buying euros. Now, the exchange, he's selling to you euro, right? Because he owns euro. He has a stack of euros and he's selling it to you because this is how he makes money. He makes money on the spread. But sometimes he holds big amounts of euros. So he actually, if somebody comes and wants to travel to Europe, he can sell it. He needs to hold those euros, and those euros he have to manage. He does manage it here. You understand? But he is selling the euro no matter. He is not going to tell you, sorry, I'm not selling you euro because I think euro dollar goes up. He's selling to you euro because you want to buy euro, and that's what he does. Right? He